Let's talk about one of the new listings, Concord Biotech. It's the first interview that they're having post their listing. So let me welcome on board Ankur Vaid, the Joint MD and CEO at Concord, joining in on the show right now. Ankur, hi, morning. Great to have you today on ET Now. Now that your listing is done, let's talk about numbers and tell us what the company sees by way of revenue as well as PAT growing for FY24 and even beyond.
Sure. Good morning, everyone. So, just to give you a brief before we jump into the numbers, we have recently set up in FY22 one of the largest fermentation plants, wherein we have put in 800 meter cube of capacity vis-a-vis the 450 that we have at Unit 1. And this has been primarily put considering the expansion of the existing products and commercialization of the R&D products, which we have quite a strong range of products, large range of products in the R&D segment, particularly in immunosuppressants, anti-infectives, oncology, and antifungals. So considering that, we are expecting to have better revenue compared to the CAGR growth of 18% that we have had over the previous 3 to 4 years. So we expect to do better than what we have done historically, which was a CAGR growth of 18%. And this, as economies of scale would kick in once a new site starts ramping up, we see our margin profiling being better than what it has been historically, which has been in the range of around 40% EBITDA.
So, fair point. Thank you for that. And, this is the second question which I just wanted to come to. Your EBITDA margin are at 40% and return on capital, ROE and ROC are in the range of 19 to 20%. So do you see a marked improvement even in your return ratios? Because if you're looking at adding capacity, operating leverage benefits would kick in?
Yes, so that's correct. That going forward, since we have enough capacities now in place, we do not see any significant capex coming in, and we would now be focusing on optimally utilizing the infrastructure that we have created. And this, as you rightly said, would help improve the EBITDA margins as well as the return on capital as well.
Okay. Fair. The entire pharma supply chain is a very complex supply chain, and there are wheels within wheels. But you are, in a sense, right at the entrance, which is that you give base fermentation products which are required for the pharmaceutical industry. So are you also exposed to the volatility within the pharma sector in terms of pricing, or yours is more like a B2B product, it is going to be constant and will go irrespective of the big large trend?
No, so of course, we are part of the larger universe of pharma, of course. So any changes does impact us. However, I'll say that we are not impacted unlike the chemical companies because, in fermentation, our raw materials are the basic raw materials which are more agro in base, like like the corn, dextrose, maltose, and all, which are readily available in India. So our dependency on China is not there. So we are not. The raw material doesn't impact us. Maybe, of course, if there are macro changes which impact, say, things like solvents and other things, so it would definitely be impacting us. But not on the raw material side. Of course, on the pricing side, we always try to be more aggressive so that our customers can gain much larger market share, and that is one of the reasons that why Concord, for many of its products, have a global leadership position, which is basically a function of how our formulation partners have gained the market share. So we kind of support our customers on the pricing there.
Ankur, when you look ahead, besides the top 5 products in your portfolio, tell me the newer therapies that you're looking at venturing into. I mean, would you, for instance, enter hormones or, the steroids category?
So, fermentation, again, is a very large segment. And while we are there in these four therapeutic class of products, which is oncology, immunosuppressants, anti-infectives, and antifungal, we are not limited by the therapy. I think as long as it meets the certain criteria that we have built internally, we are open to explore those newer set of APIs even if they are in different therapeutic classes. But our expertise in fermentation gives us the advantage to move into other segments such as the steroids, peptides, enzymes, and others. However, for such kind of projects, you need to have a separate facility. Like for steroids, you need to have a separate manufacturing block. You cannot do it in the same facility as the other generic fermentation APIs. So that is definitely something for potential growth opportunities that we could consider going forward.
Why have you stayed away from the US markets in a very large manner? Because if I look at the list of countries where you're present, Nepal, Mexico, Indonesia, Thailand, Ecuador, Kenya, Singapore, and then US. Is my understanding right that you've consciously stayed away from US market and you're going there now?
No, so I think US is one of our very key markets that we operate in, and when we talk about that we have a global leadership position on many of our APIs, US being a very key market, of course, our presence is quite strong there in the US. And I would say that we work with all the major companies in the US, companies which are there in the US, and Indian companies who are selling their finished products to the US. So in the API segment, I would say that we have a very strong presence in the US market, and this would be one of our very key markets actually to go with.
Walk us through about the government and the institutional business side of yours. That's also a very large business, and since you have a very formidable presence of 1,500-1,600 associations, what's happening there? What is the uniqueness of this business?
So, our government and institutional business, we are present in the India market through our branded generics, wherein we have presence in the nephrology segment as well as in the critical care segment. And, Concord, I would say, is one of the only players which is in the immunosuppressant segment, which is getting the API and the finished product from the US FDA side with all the B studies and catering to India market. So we are serving the transplant patients with the highest quality of products that we sell to the global markets. And this is whether be it the corporate hospitals or the government institutions. And this is one of the reasons that because we have such high quality products to the India market as well, our business in the India market is also growing in the corporate as well as in the government sector.
Okay. You have very famous investors in your company, and Rare Enterprises, very famous investors have invested in your company. Have any of the key investors who invested in your company a decade ago, 10 years ago, have they taken exit in the IPO?
No. So they continue to be with us, and I believe that they understand and they have faith in the growth potential that Concord has, especially now that we have created such infrastructure. So we are very hopeful that going forward they will continue to be part of this journey with us.
With a very powerful remark that your historical growth rate is 18%, and after the capacity addition you expect it to grow higher than the historical growth rate. What will be that higher historical growth rate, both in terms of margins and also in terms of CAGR top line?
So I may not be able to give you numbers there, but I would say that yes, as the facility, so we expect to do better than the 18%, and as facility keeps ramping up, with 450 meter cube at one point of time, we were doing close to around 700 to 800 crores of business. So now that we have put up the 800 meter cube, there is a significant amount of growth that we look over the coming 5 to 6 years. And this is a function of how the facilities will start ramping up.
Okay, thank you for walking us through the outlook on your overall business plan and how things are shaping up. So yes, they are looking at US as a very key market, very aggressive strategy when it comes to pricing, saying that as of now, the dependence on China is negligible, capex is not significant. 991, that's Concord Biotech.